Welcome everyone to the Advantage Evans FinTech Law Briefing. It is a series that we're doing on a regular basis in order to keep lawyers and other legal professionals and those interested in the intersection of law and business and technology to stay on top of the latest news with trends. Every week, I have a newsletter that goes out where I go through and curate based upon all of the news in that cycle, and then have a section that has a few links to general financial technology and blockchain technology information, kind of the user-friendly version for anyone who is an investor, a builder, a professional in the space to stay on top of the headlines. And then I have a more precise curation of legal issues. And then you can kind of either hit the high notes or take a deeper dive. So there's a free version and then a deeper dive with a paid version. And you can find out all of that information either in an email that I've sent you if you're on this call. We'll see it later. And you can always stay up to date in that way. That is my Substack. And you can learn more information about that, of course, at advantageevans.com. This summer, I am running a cohort. So the FinTech Law Summer Cohort, where some of the topics that I have here will actually cover in greater depth in the official cohort. Doors are going to close soon. I keep these cohorts intentionally small so that I can have better engagement with professionals on the call. I'm really excited about that. The first segment or the first week deals with a general overview, kind of like a sprint, a little about a lot. They are 2-hour sessions, and we take a look at blockchain, crypto, and law, basically what every lawyer must know about this area, regardless of regardless whether you are a securities lawyer, maybe an IP lawyer, where it might seem, a little more obvious. This is the ability to problem solve and issue spot really comes from focusing on the areas of the law that are most important across the board to all lawyers and legal professionals, because at the end of the day, we are problem solvers, we are issue spotters, and you can't spot an issue if you don't know that you don't know. So the idea of the summer cohort, there are 20 slots available. There are not 20 left at this point in time. Registration closes soon. So if you want more information about how to engage with me and a smaller community, either anywhere from 5 to 20 is the absolute maximum, but I think the sweet spot will end up being about 5 or 10 legal professionals engaging to learn the basics, the 9 things that every lawyer must know in this space. And then the second week of the cohort, we look more specifically, I'm an intellectual property lawyer by training, so we look specifically at the intersection of intellectual property and Web3. There's so many things going on in the space, so many ways that copyright and trademark and patents are forever being transformed, and ways to reimagine how to service clients, how to monetize property in a digital environment. We've been talking about this for a long time, ever since Web 2, ever since user-generated content. But there's some new little wrinkles when we think about what Web 3 and beyond looks like for intellectual property, the ownership of digital assets, leveraging those things. I've seen some brands kind of dust off some old IP portfolios and remonetize and re-engage and reimagine those. So that's important as well. And I think in one of these briefings, we'll actually take a quick look because we only have 30 minutes together for our briefings, 30 minutes, 3 topics. And then we go on because I want to just keep everyone abreast of some of the things. And then if you want a deeper dive, we can have other opportunities for deeper engagement. The final reminder, cryptolawguide.ai. Actually, I'm going to put this in a couple of links in the chat to share with you. So hold on one second while I pull this up because I want you all to be aware of this little chat GPT assistant that I'm developing and working on. And I would really like for you to help me continue to train it and to kick the tires. It's kind of like having a Professor Evans in your pocket, not as good as me, but it's a close second. And so I want to invite you to become one of my beta testers for cryptolawguide.ai. If you're already on ChatGPT, my GPT is available in the GPT store. It's free. It's in its beta as I continue to train it on all of my teaching, my writings, reflections, but it also has the ability to search in real time. So that's another way that you can get your question answered pretty quickly in that space. I have some suggested prompts that I use as well, and your feedback will be invaluable as I continue to go on with that. Okay, let us jump into the topics for this evening. And the first thing I wanted to talk about is the Ethereum exchange traded fund launch. So earlier this year in January, there was the launch begrudgingly by the SEC. Gary Gensler he's the chair of the SEC. He's no stranger to crypto, but has taken a decidedly aggressive and anti-crypto approach, kind of regulation by enforcement. And in fact, he had to dial it back a bit pursuant to a court order that found that some of the decisions were arbitrary and capricious. I also teach administrative law, so it's very fascinating to not only cover crypto laws, my IP topics, but also to see administrative law play out in real time and what happens with administrative overreach. And that was before the Chevron decision now that would leave it to the courts, and not the courts will no longer have to defer to the subject matter experts with respect to their decisions. I have some personal problems with that, but I understand at an intellectual level about this kind of, the dialing back and the kind of hamstringing the Chevron doctrine, and we've seen that in what continues to be an unprecedented time for so many reasons. If I had more than 30 minutes with you, I would go on, but I want to hit the high notes here. So anyway, in the beginning, in January, the Bitcoin exchange traded funds were first launched and tradable on open markets. And I thought that this was, even though, I'm a pretty staunch, not only Bitcoiner, but crypto and, the ultimate benefit for an investor, if you're really honoring the spirit of being your own bank or sovereign money or financial privacy, then there are just so many wonderful benefits of being empowered to be in control and being in control of your own assets. That being said, many people who are new to the space or fall victim to misinformation, disinformation, or frauds or scams, and haven't read my book, Digital Money Demystified, that separates fact from fiction, those folks, will really fall victim to what they don't know that they don't know. And so there is a bit of a learning curve investing in the crypto space, but that shouldn't preclude someone from taking advantage of the upside while still participating in a regulatory wrapper that has, the blessing of the SEC. You have a regulated product, just like any other exchange traded fund, but now, as of January, we have spot Bitcoin ETF, meaning trading the underlying asset specifically, not a futures ETF, which we had prior to this year. But now we have the second crypto currency that is trading as an exchange traded fund. So what does a client, an investor own when they hold an ETF? They have an interest in that fund, so they're not holding the underlying asset, but they're still exposed to the potential gains, certainly the potential losses, but you're holding the exchange traded fund interest, not the underlying asset. I'm kind of a both and person. And so I love the ability to buy not only Bitcoin ETFs. I haven't bought an ETH ETF yet. All of this started to unfold when all of the news in of Joe Biden stepping down, and before that, the RNC, and before that, the attempted assassination of Joe Biden's predecessor. And then on Sunday, when Joe Biden steps down and then um, uh, puts all of his heft and weight behind Vice President Harris, and now she's the presumptive nominee. There's a lot going on. Any one of those things could have happened once a decade, once a generation. They're all literally happening within the same time. So I think that the news about Ethereum exchange traded funds kind of got buried in the headlines, but it has been as much of, as I would say, as much of a success as the Bitcoin ETFs that did incredibly well in terms of inflows. There were some outflows. I think a lot of people, for a number of reasons that we can't go into great detail today, but one company, Grayscale in particular, had a product that was that transitioned from a trust into an exchange traded fund. That's GBTC. And also that company, Grayscale, is owned by DGC. And, DCG, excuse me, and I'm a member of the DCG board in the spirit of full transparency. So when Grayscale converted its product, there were some outflows at the same time as inflows. But we have juggernauts in the financial industry like BlackRock and ARK Invest, and so many gold standard financial companies in the space, but most people aren't talking about it. This is a fantastic way if you represent folks who are asking you investing questions. Perhaps you are an estate planner and into estate administration. Maybe you are working with financial advisors as well. Maybe in your personal capacity, it's time to take a second look. This is not legal or financial advice. I want you to begin, if you're not already aware, learning the language not only of the financial industry, but how specifically it relates to these underlying assets in a new asset class that is now publicly traded as a matter of Bitcoin and now Ethereum exchange traded funds. So there's the recent launch of 9 spot ETH ETFs. In the United States, we're not the first country by far to do this. Canada made some moves, I think in 2021, actually, and it's been quite successful. This is a significant milestone for the cryptocurrency industry. And while there was a long ramp up to get the approval of spot Bitcoin ETFs, it's a far shorter race to run because of all of the efforts that came before. And the way that I see it, final point on ETFs, is that, again, providing institutional investors with a regulated and transparent vehicle to gain exposure to Ethereum in the same way you can now with Bitcoin. So some key developments that you should have on your radar. The spot ETFs for Ether, they dropped on July 23rd. So that's just yesterday, and had a combined 1.07 billion in trading volume on the first day. And that's the most activity and most actively traded ETF among that particular group. We have Grayscale, we have iShares, and Fidelity. Fidelity is another fantastic company that has been in the crypto space for a long time. So it does not surprise me at all that they are offering ETFs for underlying assets that are crypto assets. It's interesting for us as lawyers to also pay attention to the fees and the waivers. Most ETFs have waived the initial fees, so to encourage these inflows early to capture kind of the enthusiasm. Some issuers are offering temporary fee reductions or exemptions. Grayscale's Ethereum Mini Trust and Franklin Templeton also is offering one as well. They have particularly competitive rates. As I'm kind of looking at the rates as I'm speaking, their management costs range from about 0.15 to 0.19. And so that is quite advantageous. Those points are really, really interesting. And the third and final point here are the implications for Ethereum and institutional investments. So that's a major takeaway here. This type of ETF, I think it kind of enhances market stability around this emerging asset class. So definitely keep this top of mind, start comparing and contrasting with Bitcoin ETFs. And also in this space is watching the staking and the future and other future developments. So something that's a little bit different from Bitcoin. Bitcoin and ETH are vastly different. There's crypto is not a monolith, to be sure. Staking is not available in spot Ether ETFs. And what does that mean? Basically earning uh, interest effectively by leaving an asset locked up and earning interest. In the Ethereum space and in the decentralized finance space, getting some yield or interest is really, really valuable, but also somewhat controversial as there's still some battle between the SEC and would be offerers of, not would be, but even actual offerers and other proponents of yield and staking as well. The industry would argue that it is fully decentralized and therefore isn't a security. Gary Gensler and the SEC says not so fast. So there's no staking involved with a spot ETF, but that's today. We could have another briefing, which we will in a couple of weeks or in a couple of months, and maybe we would have different news. This news travels really fast, and so definitely keep your eye on that. The next thing I want to briefly touch, I just finished recording my podcast episode for this week. So I'm going to just hit the high notes of this and encourage you to, if you're not already a subscriber to my podcast, the Tech Intersect podcast, then be sure to subscribe. It drops weekly on Fridays, the audio version, and you can find out more information at techintersectpodcast.com. And then on Mondays, the video is launched. I wasn't feeling my video self today. I didn't have all the things set up. So the Fridays version will just be audio, but I will be doing more videos. I have over 200 videos at this point in time on our FinTech YouTube channel. And so I'll drop that link, or maybe I'll actually, in the interest of time, will send that to you via email. Definitely subscribe to the YouTube channel. We have not only the podcast, but all of my kind of learning videos, and I will start to do more lives as well. So what I will tell you now about this series that I'm doing, Electing Crypto 2024, it started with, I just was kind of growing, just really tired of the discussions within the crypto industry. Let me rephrase that. Let me start it this way. I understand very, very much why the crypto community is so angered with the present administration's approach that I thought was always wrong-headed. I think the Dems, and I am a progressive Dem, took a decidedly challenging turn, one that I don't think should have happened, to do this regulation by enforcement, to have appointed Gary Gensler, again, no stranger to crypto. He used to teach blockchain law or blockchain and crypto. And it's not that he doesn't understand, but there was a decided focus by the administration to tamp down this industry as much as possible. I think if they were describing it, they're worried about fraud and scams and money laundering, et cetera, without an acknowledgement that less than 1% of the uses of cryptographically secured assets and blockchains are used for nefarious purposes. The number one currency involved in illicit transactions, and the preferred by a long shot, is the United States dollar. I'm not throwing out any dollars. I'm not burning any dollars. I love my dollars, but also it has done incalculable harm to the industry to continue to beat this drum at the behest of Senator Warren, who, after now Vice President Kamala Harris dropped out of the presidential race, actually supported Senator Warren. So I'm very disappointed in the and the position that she has taken, so primarily at the behest of Warren and Gensler, we have a terrible policy in the United States we're falling behind, my personal opinion. So I say all that to say, I get the anger, the outrage in the crypto community that has now taken a proactive stance to raise millions upon millions of dollars and throw it into now this is the part I don't understand, throwing it into the camp of the GOP nominee because he has switched his focus. In 2020, Trump is famous for saying Bitcoin is for criminals and it's terrible. He was led by Mnuchin at the time, who also was a big bank person in the same way as Senator Warren is a big bank person. And so actually the crypto community was quite excited for a Biden administration and had high hopes in 2020. Didn't bear it out the way the industry believed, and now once bitten, twice shy, I think, is the approach. So I have some space and grace for that. But to support my personal opinion now, the single issue voter for crypto, and shout out to Vitalik Buterin, co-founder of Ethereum, who says, throwing all of your weight behind a candidate that simply is for crypto without assessing the entirety of whether there's economic and social justice, where there's access and inclusion, is a fool's errand. And I happen to believe that as well. So I've been writing about the ways that the Democratic Party has gone astray, I believe, and in what ways can policies be revised, renewed, reimagined under a Harris administration. So I've written a pretty detailed op-ed for CoinDesk that's coming out any day now. And again, I use that information to also do a podcast episode on it. So I just want to put that at the top of your mind. In what ways can the Democratic Party, and this is not a political leaning per se, because the argument that I am making is finances and economic justice is always political, but it doesn't have to be partisan. There's some really great bipartisan initiatives in the Senate. You have Senator Lomas from Wyoming, a Republican from Wyoming, and you have Gillibrand, I think from New York, working together with some great reasonable regulation. The industry, good faith actors, the great majority of us want clarity. We want regulation so that something like a Sam Bankman-Fried and the FTX debacle doesn't happen under the watch of the same who would say they're down on fraud. So understanding the Biden administration's kind of choke point 2.0 approach to cutting off banking access, debanking crypto firms that were otherwise lawful and good actors. The American government actually holds Bitcoin, so can't be illegal. So in what ways are systemically marginalized people being left behind? This is something that we should be thinking about for our clients, our individual clients, our corporate clients. In what ways can the technology be leveraged? In what ways can various administrative agencies be used? And to be very careful of a single issue perspective around pro crypto for the first candidate to say, I'll support crypto and numbers will go up and you'll all be rich. That just replicates the systemic ills of the haves and the have-nots, the few and the rest of us. And so that is a major discussion. Crypto is a top of mind issue. It is not a top line issue, but top of mind issue for voters in the 6 swing states. DCG commissioned a poll by Harris poll, and the numbers, which you will find if you follow me as well, or you can search it for DCG Harris poll to find out what swing state voters are saying about crypto and the importance of an informed legislative body that creates the legislative framework that informs agencies. And so that's really important too. So let's look out to see if a Harris administration will usher in a policy shift. She has traditionally embraced innovation. and a centerpiece of her campaign is on economic justice. And so I see a lot of opportunity there to move the needle and move us kind of back to actually Obama era times when the administration was more friendly. Final thing I want to share, and then we'll get out of here, is around decentralized AI. I'm raising this today, not again to take a deep dive, but to put this on your radar because you will start hearing more about the intersection of blockchain technology and artificial intelligence. Part of the benefit of decentralization of the web and the internet is to remove centralized siloed data centers and spread it so that there's greater access, greater opportunity, greater inclusion, and also to avoid what just happened, which was the reason I was stuck in San Francisco for 3 days, where basically the entire world stops because two companies have an issue. The two companies, uh, Microsoft and what is it, like Salesforce, Microsoft and Salesforce, really Salesforce had an issue that it seems comes down to one line of code that basically brings the world to its knees. That means we have just learned the reason that decentralization of that data structure and also redundancy and some other things is something that we need to lean into. And can we use the best parts of distributed ledger technologies used not just for financial transactions, but supply chains, verification and security of the provenance of data and all sorts of things. So in what ways can you use that technology to improve upon some of the very serious concerns around artificial intelligence and data breaches, kind of the garbage in, garbage out of data and artificial intelligence. So decentralized AI is coming. It represents a significant advancement in the field of artificial intelligence, utilizing blockchain technology in order to enhance data security and transparency, governance as a matter of decision-making products and the like. So you'll hear it around data storage. You'll hear it about around consensus-based decision-making, economic incentives, just a fairer, more equitable approach that's improved data privacy, improved security, enhanced transparency. Some of the applications of that type of technology, healthcare and finance, they're heavily regulated industries and deeply siloed in terms of their data. Anytime you've switched to doctors or had to get services when you're traveling, decoupling your or getting access to your healthcare information or finances when you're traveling. I travel quite a bit. Those are really big issues. So I want you to stay ahead of it. You could be the smartest person in the room at your firm or wherever talking about this. So those are the things that I wanted to share. 3 takeaways for today. Regulatory and market integrations of spot Ether exchange traded funds have happened. Political and regulatory landscape shifts around a new administration, and I am analyzing it as a Black woman, as a member of Alpha Kappa Alpha Sorority Incorporated, as the graduated of an HBCU. I went to Howard University School of Law. I have a very precise and nuanced vision into the space where I see the power, I see the pitfalls, I see the promise, and I don't want this next wave of the development and evolution and revolution around the internet and technology to miss the people who could benefit most. You missed the dot-com boom and bust that happened in Silicon Valley. If you didn't have connections, you didn't know that you didn't know. You may have missed the real estate boom and bust and the industrial boom and bust. This is one of those pivotal moments, one of those inflection points where there's an opportunity when there aren't those traditional gatekeepers. But we got to get smart. We have to demystify, and we have to stay ahead of the learning curve. So those are my Advantage Evans takeaways for today. Because you registered for this, you have access to all of the sessions. Look out for your email. I think we have all of the tech glitches. I apologize for that, but you all are here, so that means that it must have worked. And I look forward to seeing you in a couple of weeks and certainly in your inbox. Please respond to any email. Either myself or my team will see it. We want to hear what you want to learn about. I could talk about all the things all day and twice on Sunday, but I want to make sure that I'm moving lawyers, legal professionals, and law students in the right direction. So drop a line and let me know what you would like to see. I hope that you'll consider joining me for my summer cohort. Visit advantageevans.com for more information while space is still available. Registration closes soon for this summer cohort, so I hope to see you there. And thank you for joining this evening. Thank you very much.